Meantime, ET now gets it right yet again. SBI, PNB, Bank of Baroda and LIC will have to pare their stake in UTI AMC to 10% after the SEBI board decides that one mutual fund cannot hold a substantial stake in another. The market regulator also set the stage for universal exchanges. BSE and NSE will be able to roll out commodity platforms from October. Let's listen in to the SEBI chairman, Ajay Tyagi.
Cross-holding allowed between the credit rating agencies, and any substantial holder in one credit rating agency also not allowed to hold substantial holding, that is 10% or more, in the other credit rating agency, and no board seat also within one credit rating agency to have in the other agency. Net worth requirements also, it has been enhanced from 5 crore to 25 crore, and the existing ones have been given a period of 3 years to do that. Mutual funds also, it has been approved that any substantial holding in one mutual fund or a sponsor of one mutual fund cannot have substantial holding in another mutual fund. And any such existing thing, if it is there, it should be corrected within a period of 1 year. In consultation with RBI, we have drafted a framework where security receipts could now be listed and also traded on the exchanges, helping resolving the bank's NPA issue. So there will be more ARCs who will be then competing for the stressed assets, and that will benefit the NPA resolution of banks. Allowing that all exchanges will be able to do securities trade, that is other than commodity derivatives trade, and commodity derivatives trade too. And this would be made effective from 1st October 2018.
In fact, let's talk about this in greater detail. My colleague Vijay Iyer joins in with more details. Vijay, highlight some more details on these new norms on the credit rating agencies.
Clearly on the expected lines, we all know there was a discussion paper on the credit rating agencies, so there was a lot of market participant feedback that had already come in. So clearly SEBI wanted to enhance the corporate governance norms when it comes to credit rating agency or even the mutual fund. So clearly they are saying 10% is the limit. More than 10% you should not hold a shareholding in another credit rating agencies, or for that matter another mutual fund, and clearly no board position should also be occupied. But clearly a mutual fund space is something that would be interesting, because we all know UTI AMC for the last 3 years has been pushing for an IPO with its promoters like SBI, BOB, PNB, and of course LIC holding 18.5% each. Clearly they have been now given a deadline of 1 year, where promoters clearly will have to bring down their stake from 18.5% to 10%. The other big takeaway, of course, would be the universal exchange license, which would chip in from October 2018. This is once again an anticipated step, but finally the SEBI board has given the green signal, which means clearly from October 2018 or even before that, say BSE would be entering commodity space. BSE has already made its intention clear, saying their infrastructure is ready. They have already applied for the license. MCX on its parts, of course, can enter the equity space, but MCX is on record saying to begin with perhaps currency derivatives, something that they would look at. So clearly BSE and MCX talk are something that we would need to watch tomorrow when markets open. And finally, of course, the ARCs is something, as per the announcement of Arun Jaitley's last budget, would be allowed to be listed, therein making it more liquidated as an instrument. So these are some of the big bang announcements, but the one, if I could say, disappointment that clearly no decision has been taken was on the whole issue of loan defaulting being disclosed to the exchanges in 24 hours by listed companies. SEBI chairman says clearly the discussion did take place in today's board meeting, but no consensus has been able to be made, and still they need more discussions. Clearly SEBI is not ready to budge from its position of the 24 hours timeline, and RBI says this would not be great because implementation will have its own repercussions on banks, so on and so forth. So that is something that clearly has been kept in abeyance, more discussions needed. But on the other hand, there have been big takeaways from today's SEBI board meeting, and clearly markets have a lot to cheer when they open tomorrow.
Oh, yes, indeed. Thanks very much for giving us all of those details. That ET Now Newsbreak absolutely confirmed.